In the US, Wall Street and Main Street often stand as symbols of two very different parts of the economy. Wall Street includes big banks, stock markets, and investment firms, showing how the financial sector is doing. While Main Street reflects the everyday American experience, small businesses, local jobs, and community-based economies. Under Trump's leadership, policies have often boosted Wall Street through tax cuts and fewer regulations, making stock prices rise. But many on Main Street feel these gains haven't reached them, facing challenges like low wages and job uncertainty. In this video, we'll look at why this gap matters and how it could shape the next 4 years, especially as the economy and policies continue to evolve. Make sure you subscribe to our channel and hit the bell icon to get regular updates. Let's dive in. Understanding Wall Street. Wall Street, both as a physical location and a symbol, is central to American and global finance. It houses powerful financial institutions, including the New York Stock Exchange, and serves as the headquarters for numerous investment banks and firms. Wall Street's importance is reflected in its ability to influence not just the American economy, but also global markets, through the mechanisms of capital allocation, investment, and market speculation. The activities on Wall Street are essential for fueling corporate expansion and economic growth. By facilitating capital flow, Wall Street enables corporations to access funding for expanding their businesses, entering new markets, developing technology, and hiring more workers. The ability of companies to raise capital, either by issuing stock or taking on investors, is a primary driver of corporate growth and economic development. A healthy Wall Street can boost investor confidence, encouraging both individual and institutional investors to spend and invest more, thus driving economic activity. However, Wall Street's activities can often be detached from the broader reality of the economy, where every day Americans experience job insecurities, fluctuating wages, and financial instability. Wall Street's focus on maximizing shareholder value means it prioritizes profitability, which can sometimes translate into cost-cutting measures that harm local economies and workers. For example, while a company's stock price might rise after cutting jobs or reducing production costs, the impact on workers and their communities can be negative, creating a divide between Wall Street's gains and Main Street's struggles. Moreover, Wall Street's influence over government policies, through lobbying, campaign financing, and policy advocacy, often shapes legislation in ways that benefit large corporations and financial institutions more than small businesses or individual workers. Wall Street's power in influencing policies related to tax, deregulation, and trade has, at times, led to significant economic gains but also economic crises that have disproportionately impacted the middle and lower classes. Understanding Wall Street's role in the economy and its sometimes contradictory relationship with Main Street is key to understanding the impact of economic policies and decisions on Americans' lives. Understanding Main Street. Main Street, representing the local businesses and small enterprises that shape communities, is a foundational part of the American economy. Unlike Wall Street's high finance world, Main Street operates on a community level, creating jobs, generating tax revenues, and providing goods and services to the population. Small businesses, restaurants, retail shops, and family-owned stores represent Main Street's character, and they contribute to over 44% of U.S. economic activity and nearly half of all employment in the country. However, Main Street faces growing challenges that have intensified over recent years. Inflation, supply chain disruptions, and labor shortages continue to put immense pressure on small business owners who operate with limited resources and thin profit margins. Inflation, for instance, increases the cost of raw materials, rent, and other expenses, which many small businesses find difficult to offset without raising prices, risking the loss of customers. Supply chain issues mean that essential products may not be readily available, leading to delays, dissatisfied customers, and lost sales. Competition from large corporations is another pressing issue for Main Street. Large corporations, with their economies of scale, can often offer lower prices and more convenient shopping options through online platforms, making it challenging for local businesses to compete. During the COVID-19 pandemic, Large corporations benefited from online sales and adapted quickly to shifting consumer preferences, while smaller businesses struggled with digital transitions and logistical challenges. Many Main Street businesses had to shut down temporarily or permanently, highlighting the vulnerability of small businesses in times of economic distress. Furthermore, the rise of automation and digital technology is reshaping Main Street's workforce. Local businesses, already strained by labor shortages and rising wages, now face competition from automated services and online retailers. While Wall Street-backed corporations can invest in cutting-edge technology to streamline operations, small businesses often lack the resources to adopt new technologies at the same pace, making it even harder for them to compete. With these mounting challenges, Main Street needs targeted support, such as access to low-interest loans, grants, and other financial resources. Policies that encourage local hiring, support small business growth, and provide tax relief could enable Main Street to compete on a more level playing field. Such measures would help Main Street maintain its role as a crucial driver of economic stability and growth, even as Wall Street continues to dominate the financial landscape. Trump's economic policies. Former President Donald Trump's economic policies centered on tax cuts, deregulation, and promoting an America First agenda designed to stimulate corporate investment and boost economic growth. The Tax Cuts and Jobs Act of 2017 was one of Trump's most prominent policies. This legislation significantly reduced the corporate tax rate from 35% to 21%, a move intended to stimulate business investment by allowing corporations to retain a larger share of their profits. Wall Street celebrated this corporate tax cut as it led to increased profits for publicly traded companies. Many corporations took advantage of these savings by engaging in stock buybacks, which drove up stock prices and benefited shareholders. This policy created a favorable environment for Wall Street, as higher stock prices and improved corporate profitability led to market optimism. The stock market reached record highs during Trump's tenure, with major indices like the Dow Jones Industrial Average and the S&P 500 showing strong performance. Deregulation was another pillar of Trump's economic strategy, as he rolled back various regulations in sectors such as finance, energy, and manufacturing. Trump's administration believed that reducing government intervention would encourage business growth and innovation. This hands-off approach was particularly beneficial for financial institutions on Wall Street, as it reduced compliance costs and regulatory hurdles. Wall Street saw Trump's deregulation efforts as a green light for increased investments, further fueling the financial markets. However, Trump's tax cuts and deregulation did not necessarily translate into proportional benefits for Main Street. While some small businesses benefited from lower taxes, they did not see the same boost in profitability as large corporations. The tax cuts primarily favored large corporations, which were better positioned to capitalize on the reduced tax burden. Many small businesses struggled to use these tax savings effectively, facing continued challenges from rising operational costs and competition from big corporations. Deregulation also had mixed effects. While deregulating industries like energy and manufacturing benefited large companies, it created environmental and social concerns for local communities. Deregulation in finance raised concerns about market stability, as risky investment behaviors that contributed to the 2008 financial crisis became more prevalent. This risk-taking, while profitable for Wall Street, created potential economic instability that could harm Main Street, where most Americans work and live. For Main Street, Trump's policies provided only limited relief. Small businesses continued to face challenges related to wage stagnation, rising costs, and unequal competition. Many workers and business owners on Main Street felt left out of the economic prosperity seen on Wall Street, pointing to a growing divide between the two sectors. The Wall Street-Main Street divide. Wall Street and Main Street represent two distinct sets of economic interests, and Trump's policies have, at times, highlighted the divide between them. Wall Street's main focus is to maximize returns on investments, often prioritizing shareholder profits and rapid growth. Main Street, on the other hand, values stability, job security, and sustainable community growth. These differences create a fundamental clash of interests between Wall Street's pursuit of profits and Main Street's desire for economic resilience and security. Policies that prioritize Wall Street often involve tax cuts for large corporations, deregulation, and government subsidies aimed at boosting corporate profitability. While these measures may drive up stock prices and increase dividends, they do little to address the everyday concerns of small business owners, employees, and local communities. Main Street businesses, in particular, find it difficult to benefit from policies that favor large corporations, especially when larger entities dominate the market. This divide is also evident in employment trends. While Wall Street-backed corporations may create high-skill, high-paying jobs, Main Street focuses on a broader range of job opportunities that are accessible to a wider array of workers. However, Main Street's job creation is often limited by competition from larger companies and the costs associated with running a small business. Moreover, the pressure to cut costs to remain competitive can lead to stagnant wages for employees, highlighting the disparity between the economic rewards seen on Wall Street and the struggles faced by Main Street workers. The growing divide between Wall Street and Main Street has social implications as well. Wealth inequality has become a pressing issue in the U.S., as the benefits of economic growth have disproportionately gone to large corporations and wealthy investors. While stock markets reach new highs, average Americans on Main Street see relatively stagnant wages, limited economic mobility, and rising living costs. This disparity creates frustration and discontent among Main Street workers, who feel increasingly disconnected from the prosperity celebrated on Wall Street. Future predictions. If Donald Trump were to resume a leadership role, the economic landscape could see similar trends, with Wall Street likely to experience favorable conditions while Main Street's challenges continue. Trump's policies of tax reduction and deregulation would likely persist, with Wall Street receiving ongoing support. Analysts predict that Trump's economic agenda will continue to stimulate stock market growth, potentially pushing financial markets to new highs, assuming investor confidence remains steady. However, this growth on Wall Street might not be mirrored by an equally positive outcome on Main Street. For small businesses, the ongoing struggle with inflation, operational costs, and labor shortages could create challenges, even if the broader economy appears to flourish. Without targeted support for small businesses, such as low-interest loans, grants, or subsidies, Main Street risks being left behind in a financial environment that favors large corporations. Experts warn that without a focus on addressing wage stagnation, affordable housing, and job security, economic inequality could worsen under Trump's policies. If Trump's administration were to prioritize policies that favor Wall Street without addressing the needs of Main Street, the divide between these two sectors could deepen, potentially leading to social and economic tensions. Main Street businesses, which depend on steady consumer spending and fair competition, would struggle in an economy where Wall Street sees gains while Main Street grapples with instability. However, if Trump were to implement policies aimed at supporting small businesses and local economies, the outlook could be more optimistic. By increasing funding for small business loans, promoting job creation, and providing tax relief targeted at small businesses, Trump could foster a more balanced economic environment. If you found this video informative, subscribe to our channel for more content on economic issues and policies. Don't forget to like and share this video with friends and family who might also be interested in understanding these critical dynamics. Together, we can foster a more informed community that is better equipped to navigate the complexities of our economy. Thank you for watching, and we look forward to seeing you in our next video.